Well, the stocks on Wall Street finished a little higher yesterday as a report of higher than expected inflation got tempered a bit by some data showing weaker retail sales. That was yesterday, though. What's going to happen from here on out? That's always the question you want to know in investing. We've got Paul Schatz, the president of Heritage Capital LLC, back with us. Good to see you. I always love hearing what you have to say because I say this every time. I know nothing about investing, so everything's new. All right, we did hit correction territory. I think we dropped about 10.3%. I was doing the math. So you were telling me, I think last time I talked to you, that this was probably something we should have seen coming. It tends to happen. What do we make of it in the short, the long term?
Market went 2 years without even a 5% decline. That's never been seen in history of the market. So having a 10% decline was not the worst thing in the world.
Yeah.
Interestingly, in January, you had this euphoric behavior. Mom, pop was euphoric. The institutions were euphoric. Everyone was euphoric. A 2-week decline has turned euphoria into thumb-sucking fetal position.
I'm going to guess you're not liking that, right? Yeah.
So neither one was really warranted.
Okay.
Things are fine. 10% correction, certainly. It's healthy routine unless you really are watching every day if you're an investor and worried. Don't worry. As I said, markets should go, regardless, markets should see all-time highs again, 27,000 by July 4th-ish. I also think you got a shot at Dow 30,000 if the ducks get in a row.
Yeah.
By Labor Day, we could see Dow 30,000.
Okay, well, that's some good news. Always better to not worry so much about the short term. This is also, Paul, the first time we've had you on since the new tax plan went through, and I know you've got some resolutions for people to have for 2018 regarding to that. I want to hit them one at a time. The first one you say is to either pay off or reduce your home equity line of credit. Why is that?
So since tax reform was passed last year, one of the intended consequences was that home equity lines of credit interest is no longer deductible. So if you've got some spare cash, you might as well pay that down because you can't write off the interest anymore.
All right, what about taking a smaller mortgage for the wealthy?
If you're fortunate enough to have more significant wealth, your mortgage interest deduction is going to be capped at $750,000, so you can't write off anything above that. Again, that's a very small percent of the population, but it is out there.
All right, this sounds simple enough. Sell winners.
Right, so people have been holding on to winners because they had to pay significant tax on them. The tax picture is now clear. You can certainly now, if you were going to sell them anyway, I wouldn't say just sell indiscriminate winners, but now you can sell. You have a very clear understanding of where taxes are going to be for the foreseeable future.
Okay, finally, bunch deductions.
So now with tax reform, I'm going to estimate 75 to 80% of the country is going to be able to take what's called the standard deduction and not itemized for charities and all these little other things. If you are right on the border, what you should do is every other year, every third year, try to lump everything together and then itemize in that 1 year. Don't do equal charity every single year because you're not going to have the deduction. You'll take that standard one that everybody takes.
Yeah.
Instead, you're lumping them all together, do everything big in 1 year, and then go back to the standard deduction or with the postcard filing for the next couple of years. Well, that'll help you a lot.
Yeah, and at least it'll hopefully make things a lot easier, which is what the expansion of the standard deduction was supposed to do. We got about 30 more seconds. I've got an entire list of great tips for you right here. I don't know which ones to wind up going on. By the way, as we're saying this, there is a moment of silence going on right now at Wall Street. You're taking a live look. This is, of course, because of the shooting at Parkland, Florida. So they are getting ready to do that because the market's going to start at 9:30. The president's scheduled to speak at 11 a.m. So, yes, we have 30 more seconds while they are getting ready to start trading. How about what should we be doing this year now with changes in taxes, the market correction with the 401k? Should we just be holding steady?
2 tips, one financial, market-related, one not. One, take a picture of everything in your house. God forbid something happens, a flood, a hurricane, a fire. Take a picture of all your inventory, everything you own that's insurable.
Yeah.
Get that out of your house. That's the kind of the non-really big financial stuff. 401k. First of all, don't stop putting in your 401k. People said, I'm going to stop, markets going down. No, don't do that. But more importantly, if you have an allocation, X% to stocks, X% to bonds, X% to cash, that allocation gets all out of whack when stocks go up or stocks go down. At least annually, I would recommend semi-annual or quarterly. Rebalance that back to that allocation, 50-50, 50-25-25, whatever that is for you. Don't sit back and do nothing. That's crazy. Right. Rebalance it back.
Okay. So that's just something you will go do yourself, right? Go on to, whether it's Vanguard or whomever, and just manually put it in.
Correct. It takes you 15, 30 seconds, but that's back to your own risk tolerance that you chose to begin with.
Yeah.
So when stocks go up a lot, your portfolio gets overweighted in stocks. Don't sit back and smile and say, well, they're going to the moon. They never do. Put them back to where you're comfortable just in case stocks go down. We're going to have a recession by 2020. Yeah. Stocks will go down then. You'll be unhappy. Get back to that whatever investment allocation you're comfortable with.
There you go. And I like that idea of taking pictures of things in your house. That's something that take 5 seconds. And if you don't do it, and God forbid there's a flood or a fire, you're thinking, why didn't I do that in the first place? All right, thank you. Mr. Schatz, good to see you again.
Great seeing you, my friend.
Always
Thanks
rapid
again.
fire, great ideas. Great to have you in Heritage Capital, LLC, his business.